Welcome back to Knowledge, your go-to channel for breaking down the complex world of property and casualty insurance. Today, we're diving deep into the growing world of embedded insurance, what it is, how it works, where it's heading, and why it could fundamentally reshape how we buy coverage in the future. So, let's start with the basics. What is embedded insurance? At its core, embedded insurance is when coverage is offered as part of another transaction, typically when buying a product, service, or experience. Think of purchasing a plane ticket and being offered travel insurance right at checkout, or getting rental car coverage when booking through an app. That's embedded insurance in action, but the idea is expanding quickly. It's not just about convenience anymore. It's becoming a strategic distribution model. It offers insurers a chance to reach customers when they're most aware of the risk, and it offers consumers a frictionless buying experience. Where does it work best? Embedded insurance tends to thrive in simple, standardized lines of coverage, such as travel insurance, auto rental protection, product protection plans, small commercial general liability, or professional liability. Event insurance, gig economy and freelance coverage, micro-mobility, scooters, e-bikes, etc. We've seen companies like Tesla bundle auto insurance with vehicle purchases. E-commerce platforms embed product insurance, food delivery, and rideshare companies offer liability coverage to workers through the app. But how does it actually work? Behind the scenes, embedded insurance requires collaboration between insurers, technology vendors, and distribution partners. APIs, application programming interfaces, are used to integrate insurance quoting and binding directly into a non-insurance digital platform. This means insurers or MGAs must be able to provide real-time pricing, underwriting logic, and policy issuance, all within someone else's platform, without redirecting the customer elsewhere. The challenges of embedded insurance. Now here's where it gets tricky. Embedded insurance has promise, but it's not easy to execute. Let's break down a few of the major challenges. Technology integration. Integrating with partner platforms requires robust APIs, flexible policy administration systems, and sometimes custom logic to handle risk assessments on the fly. Many legacy insurers aren't built for this. Limited product scope. Embedded works best for simple coverage. For more complex risks, like commercial property or workers' comp, customers still need a licensed agent or broker. Regulatory compliance. Each state in the US has different insurance regulations, especially around disclosures, licensing, and filings. Managing compliance while operating on a third-party platform is difficult, particularly at scale. Customer awareness and consent. If embedded insurance is too invisible, customers may not know they're buying coverage or what they're covered for. That creates reputational risk and compliance concerns for insurers. Claims and servicing. While the purchase may be seamless, claims are rarely embedded. Many embedded programs don't give customers a clear path to filing a claim. That creates friction after the fact. Misalignment between partners. A tech platform or retailer may prioritize speed and sales, while the insurer is focused on risk, compliance, and service. If the incentives aren't aligned, the embedded product suffers. What's the future of embedded insurance? Despite these challenges, embedded insurance is growing fast. Here's what we're seeing and what might come next. Expansion beyond POS, point of sale. Most embedded insurance today happens at checkout. But in the future, expect integration across entire ecosystems. Smart home devices offering property insurance based on usage and behavior. Telematics driving embedded auto insurance offers in real time. Accounting or payroll platforms offering workers' comp as a built-in feature. Contractor apps bundling general liability into project management software. Healthcare platforms bundling liability or cyber coverage for independent providers. Growth in APIs and insurance as a service. Expect insurers and MGAs to evolve into insurance infrastructure providers, offering white-labeled products to platforms via robust APIs, similar to how Stripe handles payments. Embedded claims experiences. The next wave will involve embedded servicing, allowing customers to manage policies and even file claims directly within the third-party app they bought from. Emergence of new intermediaries, new entrants like insurtech MGAs or embedded-first brokers are positioning themselves as the glue between carriers and platforms. Think of them as middleware that handles distribution and compliance. smarter personalization. As platforms gather more behavioral data, embedded offers could become smarter and more relevant. That means dynamic pricing and underwriting, tailored in real time to individual buyers. Final thoughts. Embedded insurance isn't just a buzzword. It represents a fundamental shift in how P&C products are distributed and consumed. The key to success lies in balancing tech innovation with underwriting discipline, regulatory compliance, and customer experience. But if done right, embedded insurance could lead to broader access, lower costs, and more relevant protection for people and businesses when and where they need it. If you enjoyed this breakdown and want to stay up to date on the future of P&C insurance, don't forget to like this video, subscribe to Insert Knowledge, and hit the bell for more content. More content on careers, innovation, and insurance insights that matter. Thanks for watching. See you in the next video.